Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do a lot of work in the media, and we do these roundtables week after week after week. We've been doing these roundtables since the fall of 2008. This is the 493rd roundtable, and we've done many more in our private sessions for members only. So this mode of online mentoring and online discussions has become a standard in our community, and it's been very successful and very productive. So, of course, in this COVID era, we haven't missed a beat. We've been here every week throughout the COVID situation, and we will be here, for the foreseeable future. So it's been the model has worked, and we're very happy to report that over 150,000 people from around the world, and literally around the world, from every corner of the world have participated, and we have seen incredibly interesting, snapshots and views into what's happening in different parts of the world. The event is being recorded. On our YouTube channel, 1M1M Roundtable, there are recordings of every single public roundtable, and you can definitely take a look at them. This is great learning material. If you have time to spend on some learning material, this is a good one. On Twitter, we're at 1M by 1M, and that's Romana. We publish a lot of interesting content to learn from as well. And if you're live tweeting today, please use hashtag 1M1M. These are the call-in instructions. It is a roundtable, not a broadcast, so we want you to participate as much as you would like to. For the time being, participate in the public chat. Set your public chat to send to all participants, and we'll be able to see everything that you share. Do not send me private messages, because I will be anchoring the session, and it's not possible for me to monitor my private messages, but I will pick up questions from the public chat as we go along. And then once the scheduled programming is over, I will open the line up for Q&A. We are going to start today's session with a conversation with Joe Silver, CFO at Lighter Capital. Joe, welcome to the show.
Hi, thanks for having me.
So let us get acquainted. Let us introduce you to our audience. Tell us about yourself as well as about Lighter Capital.
Sure, thank you. I've been at Lighter Capital for about 5 years now. Joined when we were about 20 people and had made about 20 million in loans, and we've been able to scale quite nicely over the last 5 years to support entrepreneurs all over the country and in the United States, and now globally with a really unique financing model. I personally have worked in corporate finance and small business finance my entire career, and worked in microfinance supporting entrepreneurs for 6 years globally. In the last 7 years in the fintech U.S. small business lending space, and there's been a dramatic amount of innovation, and I think Lighter Capital has really been at the forefront of that. So it's been a very interesting space and an impactful space to be in. So Lighter Capital is not actually a fund. We're an operating company. And we have a couple funding facilities where we have lending capital to support entrepreneurs. We've raised over 200 million of capital. Most recently, we closed a facility at the end of last year with a group called HCG Fund Management, who's a private debt fund out of Raleigh, Durham. And we have fresh capital, and we want to get it to entrepreneurs out there. Over the last 8+ years, we've provided over 200 million to over 400 startups, and that's through about 700 loans. And so loan is the key word there. So we don't make equity investments, we don't make venture debt investments, a loan with a warrant, but we just make pure loans where we're due our principal and interest payment. And that is because we really want to create a model where entrepreneurs can retain their ownership, not get diluted, make their own decisions, and grow their company. We believe that entrepreneurs should be the ones selling and developing great technology first and then selling it, and not having to get bogged down in the financing process, which we all know is very difficult. It takes a lot of time on the equity side, of course, and then most banks just don't lend to early stage technology companies. We lend this capital through a diversified suite of products. We have a revenue-based financing product, which the company really started on, which is an interesting vehicle whereby borrowers pay us back from a fixed % of their monthly revenue. So if you have a lower month or two of revenue, you pay us a lower dollar amount. And if you're growing quickly, then that dollar amount increases over time. So it's a highly flexible product, really intended to enable growth in companies. We also provide term loans, which are relatively, standard term loans with a fixed payment structure, as well as lines of credit to help entrepreneurs with working capital needs. So we really want to come at it with different tools that we can provide to help entrepreneurs succeed and scale their businesses. We lend up to $3 million. Generally, we'll do that through multiple tranches as companies grow, and perhaps not needing all that debt on day one, but we're there for them as they grow and scale to make subsequent loans. Our average loan size is roughly $400,000. And in terms of the customers that we're helping, the vast majority are not VC backed. We generally see companies that are either bootstrapped or maybe raised a very small equity round among friends and family, and they're looking for growth capital to invest in sales and marketing and product development in their business and grow. Perhaps they want to raise equity down the road at a better valuation, or perhaps they want to keep majority ownership and continue to bootstrap it. And we're absolutely a fan of either of those strategies. We really focus on growing companies and scalability of models. And at the end of the day—
Can I ask a question, Joe?
Oh, yes.
So you said you lend up to $3 million, and the first loan is usually about $400K. What does the company need to have by way of proof points and so forth for you to start lending to that company?
So we generally size our loans off of a multiple of monthly recurring revenue. So generally 3 to 4 months. So the first criteria is you need to be generating revenue. We like to see at least 6 months of revenue, if not a bit longer. And really that's because we use revenue, primarily recurring revenue, in order to understand kind of the historical growth rate and model out the future of the company. We also look for companies with relatively high gross margins. We historically have focused on SaaS companies where that's just kind of the nature of the business model, and companies with runway. So we're really not set up to take financing risk or make a bridge loan to an equity round, but we're really interested in seeing cash flow. And so that's why we're interested in recurring revenue, and that helps us understand the company's future cash flow, which we're concerned about, and ensuring that we'll get repaid. So beyond a healthy revenue stream and a little bit of cash runway in the bank, we're really open to all sorts of different models out there.
And aside from 6 months of recurring revenue, what is the threshold? 6 months of what MRR level do you start lending at?
So we'll go all the way down to 15K in MRR.
Okay.
Other companies are, in the 4 to 5 to 6 million. So the range is quite large, but we'll go all the way down to 15K.
Okay. And so you said 400 investments already?
Actually close to 700, and that's to
700.
about 400 companies, because we'll do multiple loans per company.
And 700 investments, these are all SaaS companies?
The vast majority. Yeah, I'd broadly say it's tech-enabled services in general. So we, venture out, but we really want to see, again, the recurring revenue, which happens naturally with SaaS.
And can you describe these 700 companies? And particularly what I'm trying to understand is, are these all these are all bootstrap companies? Are you talking about 700 bootstrap companies, or do they start with you, get somewhere, and then start raising venture capital? What are the dynamics in these 700 SaaS companies that you've invested in, or subscription-based companies, not just SaaS, but subscription-based?
The portfolio is quite broad across different business models, industries, geographies, and customer segments. Let me give you a couple examples that will show you kind of where we're seeing these models land. So one example is a company called List Reports, and they're in the real estate marketing space. We've made 9 loans to this company over about 4 years, and that's about $3 million in total over that relationship. And they have scaled only with our capital. They've grown actually about 10x from the time we started working with them, and have never taken institutional equity, venture equity, and don't plan to. So they purely are using our debt capital to scale. A different example is a company called Waggle, which actually provides a voice of the employee software. So you can take the pulse of your workforce and get to know people's sentiment. This is an interesting company. They were a very small angel-backed company when they came to Lighter Capital, and they wanted to delay raising a Series A until they could get better terms, really had better revenue profile, so they could raise at a better valuation. So we were able to make a small loan to the company. They were able to grow very nicely and then raised a $5 million Series A. And the interesting thing with that, once they got that capital, Lighter Capital, we introduced them to one of our key strategic partners, Silicon Valley Bank. And Silicon Valley Bank could put in a very large line of credit to help that company grow even further. And so that was kind of a really interesting story of using different types of capital, starting with Lighter to scale that business. And then another example, which is kind of completely different, is a group called Map Anything, and they provide field enablement software, geo mapping for sales forces. We met this company very early on in their life cycle. They had demonstrated revenue, and we provided them 3 loans over their life. They were scaling extremely quickly, growing over 300% annually, and they actually raised over $84 million in venture capital. They were later acquired for hundreds of millions of dollars by Salesforce, and now they're on the Salesforce platform. So by those 3 examples,
I think very well. It's a case study we have in our program.
Good, yeah. John Stewart's a very impressive entrepreneur. So those 3 examples are just to show you we absolutely have the bootstrap folks that are growing off of Lighter Capital's investment, and then we have folks that are able to use our capital to scale significantly, raise massive amounts of equity, and go on from there.
And how does that split of the 700 investments you've made? How many follow the route of going on to venture capital? How many are continuing to bootstrap? And is there any other nuance?
So of the companies that have exited our portfolio, which is about 15%, it's split roughly half and half from that exited group of folks that have been acquired or raised further equity. Others may have refinanced us with other debt or just paid off with organic cash flows. So it really is kind of split down the middle.
Okay. And why this $3 million cap? If a company is doing well and is servicing your debt, is there not a case for continuing to work? And you have an existing relationship, you've gotten to know that company. Isn't there a case for continuing to work with that company as your firm strategy?
There absolutely is, and it's right front and center on our product roadmap to continue expanding and providing larger facilities as companies grow. It's really just due to our structure and our size where we feel comfortable lending that amount of capital. But we've consistently increased that over the years, and we absolutely plan to be able to help companies as they continue to grow. Until that time, making introductions and working with our strategic partners like Silicon Valley Bank is really key to our model. So we can help companies get additional capital, whether it's debt or equity, as they scale.
Okay. Now, what is the source of the capital that you're lending? You said you have a $200 million facility that you're lending. That tells me that it's not equity that you're parceling out. Could you talk a little bit about the source of the capital that you're lending and the business model?
We have multiple lending partners right now who are large private debt funds themselves, and they focus on small business lending. They don't have the infrastructure to make the loans, underwrite and manage the loans directly. So they look for originators of loans like ourselves to do that work for them. So one of the groups is called Community Investment Management. based out of the Bay Area. And they are a social impact fund that really focuses on job creation, transparency in terms, and supporting all types of entrepreneurs. We've worked with them for about 5 years now, that's a $100 million facility. And then, like I said, we opened a second $100 million facility with a group called HCG Management, which again supports small business and consumer loan originators. And so these pots of capital are very catalytic to our growth. And our challenge is to get it in the hands of the best companies that we can find as quickly as possible.
Well, perhaps we should work together to some extent. This is very aligned, and I can understand why you guys approached us to
Absolutely.
To be featured. All right. Is there anything else that you want to add to what you've shared so far that I haven't asked you about?
Sure. A couple additional interesting things about our company. I would say we are international now. We actually launched very recently in Canada and closed our first loan there recently. That's a big step in the right direction for us. We've lent in about 35 states across the United States. Really, wherever an entrepreneur is, we're happy to lend to them. And going to Canada is really the next step there. And we're soon to launch in Australia as well. We have a key strategic partner in the National Australia Bank. And so they're helping us get over there. And so I think geographic expansion is really key to what we're doing. The other thing I mentioned is...
So actually, let me understand a few things that will help me gauge the international strategy. So do you meet every single entrepreneur? Somebody in the firm meets actually in person every single entrepreneur that you lend to?
Great question. That's actually what I was just going to mention. So absolutely not. We have built this company as a technology company. So everything we do through our sourcing borrowers to making loans to managing the loan portfolio is all tech enabled. And that's enabled us, that's helped us scale magnificently without meeting folks. So we'll have a couple phone calls through the process, but everything is tech enabled, quick and easy. And again, the intention is we don't want entrepreneurs spending their time talking to us and hunting for financing sources. We want them to develop and sell great technologies. So folks can hook up their accounting platforms directly to us via API. We can analyze all the financial information and come back with a proposed loan very quickly. It really just depends on how quickly the entrepreneur can get us the information. Again, there may or may not be a couple phone calls along the way to learn a little bit more about the business model. But we absolutely don't meet folks in person. We're really most interested in cash flows and understanding the financials. We don't make judgments based on who the management team is, what the technology is, and is it the right answer or not. As lenders, we're really agnostic to all those factors. We're just interested in the financials, which I think helps us get capital to many companies out there that may not be able to attract your typical VC type of investment.
Yeah, so it's basically 6 months of a minimum 15K MRR is really the qualification criteria, and then it goes up from there.
Sure, we'll take a look at customer churn and customer concentration. Some folks are selling to small businesses, so they might have limited concentration, but maybe higher churn. Others are selling to large enterprises, so they'll have higher concentration and lower churn. And again, we'll look at that cash burn profile and try to understand that. But you're right on those starting points of the revenue profile.
All right, very good. So as you know, we are global, so our portfolio is 100% global and spread out, and we have U.S. is still number one for us, but I would say our number 2 geography is India.
And we see a lot of companies in our portfolio with a significant presence in India. We need to see some sort of an entity set up in the United States to be able to lend just by our guidelines. But if there's subsidiaries or sister entities or employees in India, we do that all the time.
All right, very good. Okay, let's switch to the entrepreneur pitch section. Folks, I'm going to set some expectations before we begin for those of you who are going to present today or at a later session. Remember, this is a working session. It's a safe working session. You don't need to be defensive. You don't need to be coy. This is basically the entire, reason for the existence of these sessions is to work and strategize on your business and your project. So that's what we're going to do. We're completely on your side. It's possible that you might disagree with the feedback you get today. That's fine. It's your venture. You will finally decide on what strategy you want to follow. My job is to give you candid, unsugar-coated feedback, but all I will give you is constructive feedback. I really have no agenda here besides helping you move, forward. One thing you must remember, not all businesses can raise venture capital, and raising venture capital doesn't guarantee success. Today, we have Joe here, and the reason this is a very interesting interview that I wanted to bring to you is because there are other kinds of financing out there besides venture capital. And if you want to build a bootstrap business, and if you want to scale a bootstrap business, this kind of loan financing, debt financing, non-dilutive and not something that does not hinge on exit being the ultimate goal is very, very helpful for bootstrap companies. Whether you raise money later or not, our philosophy is entrepreneurship equals customers, revenues, and profits. Financing is optional. By that I mean venture financing is optional. Actually, all financing is optional. You could build a bootstrap company purely based on customer revenue. An exit also is optional. In our philosophy, exit is also optional. So which requires that if you do raise money and you don't want to exit the business, you need debt financing and usually not equity financing, although some forms of equity financing give you options to do dividend-based return on investor money. So it's actually quite a complex decision. How you want to structure your financing is a bit of a complex decision. You need to think it through. And the discussion with Joe and Lighter Capital is something that I wanted to do to show you a different way of thinking about financing. So anyway, with that preamble, we are going to start with Sourav Sanyal from Vision. Sourav, please unmute your line and tell us what you're working on.
So hello. Firstly, I hope you're all doing well, and I'd like to thank 1M for this opportunity today for presenting. So I am Sourav, and I have a team of 3 other passionate co-founders. We're all in our early 20s, and we're computer science and electronics engineers. So a few of my co-founders were at the UC Berkeley startup program, where we all really decided to come together and do something and solve problems. So we met at university in India, and while we were at university, we built our first organization. So our first organization was called Next Tech Lab. Next Tech Lab was an undergraduate research lab, and we were the first ever Indian lab to win a QS award. And to our surprise, we beat Harvard and Stanford. Right? So this is a complete bootstrap journey. So, I mean, going from us being 17-year-olds in research and software development, I mean, we went up against Harvard, Stanford, and we bootstrapped ourselves completely. We traveled around the world. We met a lot of people. We did a lot of software challenges, to keep financing our researchers. And somewhere in between, we caught attention, and we were able to get invited to the Nobel Lectures in 2018. So right now, fast forwarding 3 years, Nextech is now a group of 1,200 researchers in India, all of them below the age of 24 and have got great employment opportunities. But however, now we have shifted our focus. So we've all taken advisory roles at Nextech, and we're on a new journey. So about this new journey, next slide, please. Yes. So what we thought is to actually empower the young population of India. We wanted to create a device that would reach every household and not get obsolete whenever there's an intangible change to the hardware and focus more on the software, right? On a macroeconomic note, there is not a single Indian smartphone brand, which makes the country completely dependent on international digital infrastructure. However, the government now has finally realized what privacy and data concerns are and associated with being an internationally dependent market. And I think prior to today, prior to the entire COVID era, I think it's been kind of difficult for any startup to imagine to enter into this ecosystem. Right. So here's a few other problems that we've faced with our small community that we built up of 700 users. So a lot of the costs, the overhead costs of software development are brought onto the user. Software and hardware has been merged into one product, and it's given out to users. And the other problem is inability of people in India to get a line of credit, to get credit cards, and buy really good devices for themselves, right? Apart from this, India has a massive developer community. However, most of them don't work for organizations that don't work for themselves. They're all mostly software developers in massive IT companies, right? So that's leaving a lot of untapped potential. Next slide, please. Right. So what do we plan on doing? Right. So first thing.
Can I give you one piece of fact before you go on?
Yeah, sure.
Don't put this much text on a slide. No one can read. So this is just, if you have this much, if you have this, for example, take this slide, the problem slide. You have 3 problems. Put them in 3 different slides and not one slide.
Okay.
And the same goes for the solution slide. Because otherwise, you're basically wasting the slides. No one can use the slides. We can't read the slides.
Okay. Yeah, we'll definitely take that on.
Go on.
So as for the solution, the first we'd want to establish ourselves as a smartphone brand. So whatever little capital that we have on our personal funds, we have started development. And we've started with our social media as well. We clock about 200,000, an engagement of 200,000 people a week. So that's how many people we contact or talk to every week. Now talking about the device itself, here's what we plan on doing. So the first step is, creating awareness about data security in India. So we give the rights and the access of the user data to the user itself. And of course, give him or her the option to share that, right? Now, coming back to the point where I said the market barriers to entry have dropped. So now for a short stint of time, we would be able to create a window for us because there is a consumer mindset shift in India. The entire Indian government and the consumers are now on an agenda for a vocal for local. It's a sentiment which we assume won't play out for a very long time. But it does create a small window for us to enter into the market.
Sourav, I have questions for you.
Yeah.
I don't know if you can answer these questions right this minute, but these are questions in developing your strategy you're going to need to answer. See, the smartphone user market anywhere, and let's focus the discussion on India. It's a very large market. Like I don't know, 600 million devices or something like that. It's like very large.
Yeah, it's about a $28.5 billion industry.
Right. So it's not one market. There are numerous segments in this market, and I would argue that most of this market couldn't care less about the issues that you're raising. A vast majority of this market is interested only in price, which is what Jio is tapping into. And Jio is very powerful and continues to be more and more powerful. Jio is that homegrown, brand that Indian smartphone users are kind of getting used to because Jio is offering a pretty compelling value proposition, and it has convinced the international community to get behind it, including investors, Facebook, et cetera, et cetera. So that is one segment, which is kind of like the, the price-sensitive market is what Jio is going after. Your positioning cannot be front and center against Jio. You're going to have to come up with a different positioning, focus on a different segment. Now, what you're saying about data ownership, obviously, Jio's whole investment thesis is around the fact that they're going to monetize their data. So, is there a segment of population that is not price sensitive, is interested in local, and is interested in owning the data? And what is that segment? How big is that segment? What is the definition of that segment? That's the question that is front and center in positioning the company that you're trying to build.
Yeah. I mean, they're all great questions. We do understand that India is an extremely pricing sensitive market. That's why we have kind of developed and worked around a new pricing model. So a model which, does not hurt the affordability in India. We do understand data and all. They do not affect the direct sales of the product, but however, they are services that would be required for us to build in the long run. Coming to your question, I'd like to directly answer it is, can you quickly move to the next slide? Yeah, the next one. Yeah. So here's what the previous one. Yeah. So here's what we're doing different. So in India, the average cost of a smartphone is about $250, right? And the age segment is about 16 to 28-year-olds who buy high performance devices for themselves at home, right? Now it's getting very difficult for them to purchase these phones, even with Jio being just a telecom provider. They're just providing 4G. There is no device in India that is local and has a pricing point advantage. So here what we're trying to do is, so we provide that $300 phone that is sold with the software at about $150 to $200, and which is very accessible for most of the Indian market. It's good enough for us to build consumer trust. Right. So first point of interaction with the user is the hardware purchase. So about $200 goes in there, which for a premium device is very surprising in the Indian marketplace. And then we go with SaaS payments.
Saurav, you're proposing that you're going to release a new model that is priced at this $150 to $200 level, but it's a high-end device. That's your strategy.
Yes.
And how are you going to achieve that? Have you done the bill of materials analysis to understand what is the...
Yes. So we've spoken to about a lot of manufacturers in India who we've given them a list of materials and what we require built, the housing. Of course, there are some minimal upgrades, for example, using an aluminum alloy or all of that, which really doesn't matter when it comes to the user. Of course, the end specifications do matter. So that's where we're cutting down most of our costs. For us to manufacture about the $200 premium device costs in India without economies of scale and bulk purchasing costs us about $110 to $120. So we do make a margin on the premium device. And post that, after 3 months is what we're generally looking for. We start a subscription model which is as low as $5. So it can be looked two ways. It can be looked as you paying for the software, or you paying for the for just the hardware on a financial scheme where you get the phone and you pay $5 per month. And the best thing is, since it's a technological product, we have complete control over the software. We are creating our own operating system with our development team, where we have a lock on every single phone. So it's very easy for us to control. And with $5 payments and having multiple channel partners, and what we're trying to do is, connect with e-commerce websites who, have a gamification of certain points and all of that. We still haven't built on that type, but that's where you start getting SaaS credits, or you pay your $5 fee, and then that's how you keep progressing over time. So that's what our model is.
what is your assumption about who is the ideal target customer for this?
Yes. So our ideal target customer is the average going college student in India. So a lot of college students in India who age from 18 to about 25 years old, they all want premium devices. So, I mean, amongst the 700 user community that we have, we've asked them questions and we've tried understanding what they want. And each of them were like, I really wish I could have this at a price point that is affordable to me. So for them, paying flagship prices about $500, $600 for a device at one payment scheme is very difficult. However, they want those specifications because they feel it would really enhance their performance in day-to-day life, give them more durability, and not require to change their phones. Right? So that's our target market.
That means that you're looking for affluent college students whose parents can give them that budget. Even $150 in India is not a mainstream price point, right?
Yeah, it's not for actually. It is for the urban consumer, and I think the average price range of a smartphone in India sold on Amazon or Flipkart, the e-commerce, the data available is about $200, and most of the volume is sold to this age group and at multiple points of time in the year. So I think the possibility of college students affording a $200 phone is very possible.
Yeah, a certain segment of college students. So in that case, based on what you just told me or told us, I would say that your pitch kind of is misleading because the problem statement that you started with, local and data security, none of that really matters. What your positioning point is actually total cost of ownership of this phone for a segment, for a particular segment. So I would pitch this differently. I would pitch this as this is a phone that is targeted towards the urban college students who want high-end devices at an affordable price. And you want to create a high-end device that is almost half the cost or one-third of the cost of the market, of the international brands that are playing in that segment. It seems like that's what you're trying to do.
Yes.
So the pitch needs to be revised.
Yes, definitely.
All right. We've spent quite a bit of time on this already, almost 20 minutes. So let's get to questions. What questions do you have?
Yeah. So the first question that we had was, how do we for us? I mean, we have limited personal finance, and we can probably get the first 15 prototypes ready. The most difficult part for us is understanding whether, after our personal funds round, how do we go about making investors understand that it isn't a very hard product to do. It's very much possible now. I think because after the 15 prototypes, we definitely need some sort of capital backing to get us to the first 1,000 phone benchmark.
The short answer to your question is, at that stage, given the backgrounds and given the market space that you're going after, there would be no institutional investor funding. The only funding you might be able to get is friends and family funding. Otherwise, you have to do this organically in a bootstrapped way. There's no other way to do this business.
Okay.
So that's just the cut and dry answer to your situation.
Okay. Either way, thank you so much for having us.
You're welcome.
Yeah.
All right. I take it, Joe, you didn't have anything to add to what I just told Sourav, did you? Sorry, I didn't check.
Well, the only thing I would add is, we don't really fund hardware businesses like you mentioned. We do have a lot of resources for entrepreneurs. We have one called the Startup Finance Playbook, I can actually send out the URL here, and so it helps entrepreneurs navigate.
That's okay. That's not what I'm looking for. I'm not looking for your resources. This is a entrepreneur pitch dialogue. I was looking for
well, it helps entrepreneurs navigate different ways to raise capital.
That's not what I'm interested in right now. Absolutely not what I'm interested in right now. So.
Thank you.
Okay. Adetola Asa from Nigeria, please unmute your line and talk about what you're looking for. Is Adetola on the call? Maureen, what's going on? So, Joe, you have a question from the audience that actually is worth answering. You have answered this question in the interview, but maybe actually the question is from Adetola. The question is, in your model, any moratorium on repayment plans? No, you haven't answered this question.
Hello?
Go ahead.
Can you hear me?
Adetola, just a second. I'm just asking Joe to answer your question that you asked in the public chat. Please go ahead, Joe.
We do have different features in our revenue-based financing repayment. So if you hit certain milestones as your company is growing, your payment will decrease dramatically in a given time period. Because let's say you're paying us 5% of your revenue and you're growing extremely quickly. We don't want you to have to pay us back in 6 months or something like that. We generally target a 36-month term. And so we will restructure the loan essentially to ensure that happens. So we do control the payments to make it entrepreneur friendly.
Great, excellent. All right, Adetola, go ahead and do your presentation.
All right. Thank you for having me.
Yes,
Yes,
my pleasure.
Yeah, thank you. My project we are working on is KawemiValley. The KawemiValley is okay. Before I talk about KawemiValley, let me talk about myself. I'm Adetola Asa from Nigeria. Sorry, can you hear me?
Yes, we can hear you.
All right. Yes, I have an MSc in information technology, and I'm a visionary and innovative professional. I promote e-learning and distance education in where we presently, and presently I manage and coordinate academic and professional programs. I facilitate and coordinate several training sessions and workshops. I have over a decade experience in e-learning, and presently I've been certified as a trainer in distance education in Nigeria. So coming up with KawemiValley, please next slide please, thank you. Coming up with KawemiValley, KawemiValley is a proposal, is an idea that was brought up during my experience live, training people online, training people face to face, doing a lot of things, promoting educational values, promoting e-learning and stuff like that, doing workshops all around. So I have a company called Ifis Consulting. That's the company that I also founded. Based on that, I now have to bring out this KawemiValley out of the Ifis Consulting. I want it to be a self-sustaining organization on its own. So I named that KawemiValley International. But now the project we are working on is KawemiValley. KawemiValley will be a platform. Next slide, please. Okay, KawemiValley will be a platform where will be a technology-enabled learning platform or a community available 100% online to learners and trainers anywhere and anytime in the world using any internet-ready device of their choice. So we look into people gaining experience, having knowledge, majorly professional development. People want to learn a lot of things, but because of constraint of time or distance, they can't have access to it. For example, somebody will look into people who have who couldn't gain a lot of experience because they are located in a local area, but they want to gain experience from other people. So people all over the world can have access to this platform at a token. And so the problem we are looking at right now is, number one, high unemployment rate. Prior to COVID-19 pandemic issues, there's been an unemployment issues, especially in Nigeria, and I know it's global also. For instance, this document says unemployment rate in Nigeria averaged 12.3% from 2006 on 2018. Now that the pandemic is here, this COVID-19 has caused more large unemployment rate. It has increased that barrier now. It has increased that level higher now because of COVID-19. A lot of people have been losing their jobs and a lot of things have been going on. So we are looking towards that. I'm looking towards where there can be a way we can solve this issue of unemployment globally, starting from my country or Africa, then globally. Then we also look at remote teaching. Remote teaching and coaching very minimal. See, presently people don't believe that before this era of pandemic, people don't believe, especially in my area here, in the country here, that you can do a lot of things remotely. You can, if you tell them that you can study online, they will not believe you. They will tell you it's of low quality, or is an easy way how to gain your credential. But presently now, a lot of organizations in the country now are looking towards going online, taking their projects online. A lot of training institutes are looking towards taking all their courses online. So, and this will create jobs opportunity for people all over, maybe all over the area or even all over the world. Because if big companies can try to go remote and have access to quality content online, it will be a great thing to do. The minimal community of innovators. I realize that innovators around the world can come together in one platform and solve issues and solve a lot of issues on ground. Doesn't mean you have to come over to a country and maybe a roundtable meeting, but you can always do that remotely via that platform. So that's the problem that I saw, and the solution I'm trying to create now is the next slide, please. Thank you. The solution is learn, teach, and innovate. If you are in the platform, you'll be able to learn from that platform. If you're in the platform, what you've learned, you can also teach others, you can coach others, and while you learn and coach, together, you can all come together and create innovative ideas and bring out innovations out of your ideas. So learn. The platform will be an artificial intelligence enabled platform for learners to collaborate with coaches to share knowledge. So anybody that it will be a subscription based platform. So anybody that subscribes to that platform, we have access to coaches all over the world. So it depends. Different niches can be looked into. So somebody who wants to train his dog how to talk can also have access to a coach that can do that. Somebody who wants to be fit professionally can have access to a coach that can teach him or her that aspect. Then teach. The platform designed to create a global workplace for professionals to work remotely via teaching and training. These aspects will also create job opportunities even post-COVID because people will be able to work from wherever they are. A lot of coaches out there now might have lose their clients because of lockdowns or stay-at-home policies and lockdowns. But by the time everything is eased up, they may still not be able to get in touch with their clients again. So with this going online, they can have access to all these clients. Then innovation, they all come together. Different people from different fields of life can come together and create ideas and create solutions to world problems. So that's that. And NASA is already there. So how is that it works? So I've said that we are looking towards bringing together different coaches all over the world and trainers all over the world to train people, to teach people what they know, to impact the people in what they can do, and people who want to gain from them can also enroll or subscribe to this platform, because we realize that a lot of people subscribe to entertainment platforms. A lot of people subscribe to games platforms like all those stuff like that. But academic platforms, people are not really into that, especially in this part of the world, in this continent, Africa and Nigeria at large. So we are looking at people being engaged in that platform to gain knowledge so that they can impact the world. So matching of clients to customers, or let me say coaches to trainers or learners, will be via artificial intelligence. Although for a start, you can still use a manual way if you don't have a large.
Adetola, I think we understand what you're trying to do.
All right.
And you're saying that you want to do this as a global platform. Have you done competitive analysis on this market?
Yes, I've done that. I've done that quite all right, because
where is the competitive analysis slide?
Okay. I don't think maybe I didn't include that. I didn't include.
So who is the top competitor for this?
Yes, presently I'm looking at. We have a lot of competitors globally. We have 1Mby who has a lot of courses online, but they are not into coaching online. We have 1Mby, we have Coursera that has a lot of courses online. We have Flex Study that have a courses online. But I'm still looking at coaches. Where then there's another one, World Business Coaches Summit. It's another platform that has that type of strategy. But from Nigeria, I don't think there's nothing like that coming from this part of the continent. So beginning out from this, from Africa, from Nigeria.
Yes. Adetola, one piece of feedback you have to take into account is if you want to do something global, it doesn't matter where you are. No one cares that you're from Nigeria. Okay. People care whether you provide something of value or not. And are you the platform that they want to set up shop on? So if you want to get coaches around the world to bet on this platform, they don't really care that you're from Nigeria and there's nothing else from Nigeria. That's not what they're going to base their decisions on. What they're going to base their decisions on, what you're trying to do is a marketplace for coaches and trainers. And you're right that these people who are coaching and training are today on places like Udemy or YouTube or Coursera and so on and so forth, or on their own platforms. And it takes a tremendous amount of profile building, credibility building, before people can command serious amounts of, engagement. So if you look at, for example, and then there's all these vertically aligned platforms like Pluralsight, for example. If you study the Pluralsight case study, we have that Pluralsight case study on our platform. If you go to our blog, you can find it.
Content platform.
Pluralsight is a community of people who teach various kinds of technical disciplines, whether it's networking, programming, these kinds of very hardcore technical stuff, different programming languages, different technical tools, etc., etc. And they set up courses, and people subscribe to Pluralsight and have access to those courses. Now, what you're saying is that you want to set up a coaching marketplace where people will, find somebody to actually coach them or tutor them or whatever on any discipline, any subject. Now, to do that, you do need some provision for people to set up their credibility. People are not going to randomly take something, or trust somebody on a platform without knowing what their track record is or what their expertise is. So you're going to need to figure out how to give them the ability to establish that credibility. And then you're going to need to figure out how to recruit around each discipline where you create this kind of marketplace, the demands. So today, let's say Pluralsight decided that they wanted to offer this functionality that you're talking about as a feature of their platform. So they already have people, the coaches and trainers there who have set up their profiles, their learning material, people are learning from them. It's an easy extension for them to offer to to set them up to communicate and get personal coaching and so forth. Same with Udemy. And that's one of the reasons why these coaches and trainers go and set up shop, set up their profiles and their content on Udemy and Coursera and Pluralsight and so on and so forth, lynda.com. LinkedIn Learning is a big one. So what you're competing with are these content sites who are offering content from particular people who are building their personal brands on these platforms, and then they are extending that into coaching relationships. So you can't necessarily just set up a marketplace and say, here are coaches and here are people who are interested in these coaches, without tackling how these people are setting up their profiles. Now, one possibility is, and I don't know if these platforms allow you to do that or not, whether it's LinkedIn Learning or Udemy or Pluralsight, can you embed what they've already set up in those different platforms and create a profile directly by embedding what they've set up elsewhere to set up a profile? That would give you a starting point. If you can convince a bunch of coaches in whatever discipline you want to start with, if you want to start with technical disciplines, you go to Pluralsight and invite people from Pluralsight to set up shop on your platform, and then you help them market and so on and so forth. So it's not that straightforward to just say that we'll bring coaches on and we'll immediately get matches. You have to do it piece by piece. You're going to have to do it subject, discipline by discipline, and you're going to have to create both the supply side and the demand side, and create enough proof point for the coaches that you're bringing on, such that people, the consumers who come on asking for coaching and willing to pay for coaching, have a way of knowing that, yeah, these are credible people.
Yes,
you understand?
Yes, thank you.
Okay, the last piece of feedback I'm going to give you is, again, I don't think you can raise money at this stage. This is not, with no proof point, with no evidence that you can make this roll, nobody is going to write a check. And especially in ecosystems like Nigeria, where there is really not much of a seed capital ecosystem, most certainly no concept financing. If you get validation, there are small pockets of financing available in Africa. We know some of the investors who work in Africa as well, as we know a lot of the investors who work in India. But generally, you cannot raise money on a concept, which is what you're trying to do, and that doesn't work. So you're going to have to bootstrap. Hang on, I will explain some of the bootstrapping related resources in due course, but don't start with the assumption that you can just take this concept and raise financing to get started. You're going to have to get started in a bootstrap mode, put one foot before the other, start validating, and you have to start small. You can't tackle this problem on all flanks. You're going to have to pick a domain in which you create both the supply side and the demand side, and you start establishing transactions, revenue generating transactions, and you have to figure out how to establish credibility for that domain, for that set of coaches. So you're going to need to identify a set of coaches, approach them, start talking to them, bring them onto your platform, and then build demand for that, so on and so forth. It's not that simple to just do it across the board for all disciplines and so on and so forth. And that's what I see missing in your thought process, is how to put one foot before the other. What is your market entry strategy? What is the strategy with which you develop the early traction, and what is the roadmap of how you go from one discipline to the second discipline? What is the first discipline that you want to tackle, and so on and so forth. So I suggest you study all these content sites really deeply, the Udemy, the Pluralsight, the LinkedIn Learning, the Coursera, and find out which discipline would fit best for you to bring on a set of coaches onto your platform and then generate demand for them. And then you have to figure out the other side of the equation is, how do you acquire learners who want to connect with these coaches.
Mm-hmm.
Okay?
Yeah.
Joe, would you
Okay.
like to comment on Adetola's business? And please restrict your comments to giving strategy advice to his business, not resource pointers.
Really fascinating business, and no, nothing to add. I think you gave him great advice.
Mm-hmm.
All right. Okay, so I think that concludes the entrepreneur pitches for today. So, folks, as you observe, I'm sure, I'm not giving pats on the back for these entrepreneurs. I'm giving quite candid, quite substantive feedback, and you have to have the stomach to accept that kind of constructive feedback. And that is the ethos of this platform, the 1Mby1M platform. No matter what stage you are at, to get to the next level, there are roadblocks, right? We all have to remove those roadblocks and get to the next stage through strategy and through execution. That's what we do here. It doesn't matter whether you have zero revenue or $15,000 MRR or $50,000 MRR or $500,000 MRR or whatever stage you're at. Getting to the next level is an exercise in strategy and execution, and that's what we specialize in 1Mby1M. If you like what we're doing, please refer 1Mby1M to serious entrepreneurs. And the word serious was in bold for a very good reason. We are interested in entrepreneurs who really understand that it takes many years and an enormous amount of work to build a real serious company. Resources-wise, everything is at 1Mby1M.com. You can start your exploration on the blog. We have an enormous number of case studies, 1,000+ case studies of successful entrepreneurs and their journeys, including 100+ unicorns, 400+ successful VC funded startups, another 400+ bootstrapped startups. Case studies are great to learn from, and especially case studies within your domain or within your business model that are good parallels, good proxies for what you're trying to do are very good to study. We've had numerous entrepreneurs learn just by studying these case studies. And they're available for free. I recommend that you take a look at those. The Entrepreneur Journeys book series is based on our case studies. They're case study-based books. There's 12 volumes, and they specifically focus on different topics. So you can look at the topic series and see if there's anything that you want to. Bootstrapping with a paycheck is a very popular one, by the way. We have entrepreneurs who bootstrap with a paycheck and get to revenues. In some cases, they get to break even. In some cases, they get into Y Combinator. In some cases, they get into, venture financing, all kinds of things. So bootstrapping with a paycheck is a model that we use extensively within the program, and it's a very underrepresented and understood model. People discard it. Most incubators and accelerators discard the bootstrapping with a paycheck model. We don't. We actually respect it tremendously. Similarly, bootstrapping with services is a very interesting model. We've seen case study after case study of great success stories. Oracle was bootstrapped with sales services. Alteryx, which is a multi-billion-dollar public company, was bootstrapped using services. So we have great case studies of bootstrapping using services, and you will, learn a lot about how they have gone about building their businesses using those models. So in terms of other resources, these roundtables are available every week. So you're very welcome to come back as many times as you want, and the recordings are also available. Our full acceleration program is 1M Premium. We offer you extensive methodology guidance. We have a full curriculum, digital curriculum. We help you with business development. We have one of the best Rolodexes in Silicon Valley, and we let all premium members access that Rolodex. The strategy consulting, mentoring, coaching, whatever you call it, that you experience today is what we do on a weekly basis for our entrepreneurs in the premium program. We also help you with financing and media relations. We have a terrific network of investors, venture investors, and other kinds of investors. If you go to the Seed Capital series on the blog, you will see interview after interview of investors in our network, and that's a good way to get to understand the mental model of these investors. Just like you're looking for product market fit, you will also need to achieve investor entrepreneur fit for a financing transaction to happen. So we pay a lot of attention to what are these investors looking for and send you to the investors who are a good fit for what you are looking for and what they are looking for. So that's a $1,000 annual membership fee program. By the way, it is stage agnostic. Mostly it falls in the broad bucket of early stage, but early stage can be pre-revenue concept stage. Early stage can be, 15,000 MRR, or early stage can be you have your first customer. Early stage can be you have 50 customers and you're trying to get to 500 customers. Early stage is today a very broad selection of companies, and it has fragmented. When I was doing my first few startups in the mid-90s through to the end of the decade, it was seed and Series A. Today, that ecosystem has fragmented tremendously. We have friends and family, pre-seed, seed, post-seed, pre-Series A, small Series A, large Series A. This is a very large continuum, and then there are all kinds of debt financing in the middle of this, whether it's bridge, whether it's the kind of stuff that we exposed you to today with Joe's company, Lighter Capital. There's all kinds of nuances that have made the early stage financing ecosystem quite rich and a lot more complicated. So the number of firms is about 1,000, seed firms, seed as in early stage firms that play at the various nuances of seed financing. So it's complex, and we try to do a good job of exposing you to the thought process of the various players in that ecosystem, and we have relationships with all stages of that ecosystem. I recommend that you go study the self-assessment. It's a free tool on our website. These are questions that venture investors would ask you, and you're going to need to be prepared to answer these questions before you go up in front of a venture investor. So I recommend that you try to get solid with these questions and the strategy on how to tackle each of these issues. If you get stuck on methodology, you can study 1M1M Basic, which is our curriculum-only option, and that will help you plug all your methodology gaps. So dig around on the website. We have everything described in great detail, what to expect from premium, what to expect from basic, FAQs, video FAQs. The curriculum is described in great detail. We have core, 7 modules in core, and then we have a variety of electives that are domain specific. You can, find elective modules for various different domains and trends in the industry. This is a case study-based curriculum. We teach in video lectures and case studies. Our methodology is lean, capital-efficient, bootstrap startups. And the philosophy is bootstrap first, raise money later, or not at all. That's it. We have 3 more roundtables in July and 3 more roundtables in August. So summer is full. We have 6 more roundtables during the summer. By all means, come and pitch or attend any of the roundtables. We also have Q&A sessions as online rendezvous on LinkedIn Live, Facebook Live, and Twitter Live. And those are on Tuesdays, and there are 3 more in July and 3 more in August at 8 a.m. Pacific time on any of those platforms. You can access through any of those platforms. That's it. We can go to Q&A. The line is open. If you want to dial in, let us know. And you can also ask questions in the public chat, and I'll be happy to answer. While you're doing that, let me introduce you to Irina Patterson. she will answer questions about the 1M program. Her email is irina@1mby1m.com. All right, questions, folks? Any success story of people on H-1B who are on 1M program? We don't check on visa status of people. We're not immigration lawyers. And it's not something that we have any visibility into, is what visa people are on. Questions? Any other questions, folks? All right, if there are no more questions, then we're going to adjourn for today, and we will see you next time. Hope you are all staying safe. There are a lot of parts of the world where the pandemic is still in a very serious state, and it will continue to be in a very serious condition given how badly governments are managing the pandemic in a lot of parts of the world. So stay safe and wish you all the best. Bye, everybody. Thank you for coming.